designed to encourage, empower, and educate real estate professionals by sharing best practices from business leaders that are proven winners. I'm your host, Kyle Malnati, and this is Calibrate Real Estate. Broadcasting from the Mile High City, thank you for tuning in to the Calibrate Real Estate Podcast. I'm your host, Kyle Malnati, and we appreciate your download, whether you're checking us out on Spotify, Apple Podcasts, or YouTube. I just love to say thank you. If you would leave us a 5-star review, especially on Apple Podcasts, that means the world to us. This is episode 91. 91, holy cow. I am so excited to share with you Lee Kearney. Lee Kearney is a real estate investor. His key focus is educating real estate investors on the market and how they can scale their business. Lee has been a fix and flipper. He's been a real estate investor. We go into a huge discussion about failure in this episode. Lee's not only a real estate investor, but also a business coach. So if you want to connect with him, you can find him out there on social media. Specifically, his website is spincompanies.com. So without further ado, here's my interview with Lee Kearney. So we're going to talk about the real estate industry. We're going to talk about real estate investing. We're going to talk about Lee's approach to what type of real estate investing to do. And so just to get things started, Lee, why'd you come here to America, first off, and how did you get into this world of real estate?
Sure. That's actually two good questions. Initially, I came here because my sister was doing college in the States, and I thought it would be a good experience. Leave home, different country, get away from my parents. You know, we're all ambitious when we're 17, 18 years old, and our parents are keeping us down. So I wanted to go do my own thing, and it was good experience. So came to college here in Tampa, Florida, and got my AA, got my associates, got my degree, and then started my master's program, but realized, you know what, this is too much school. I'm out. And so I decided to move back to Ireland. So I worked for my father's company there in industrial sales, which was good, by the way. Anybody listening to this, if you've been in sales where you're dealing with good customers, bad customers, that's the basis of learning how to talk to people. And I'm so thankful for that experience, because that's what gave me that year experience. I learned how to deal with all sorts of people. And I say the same thing for a server, for a bartender, anybody that deals directly with the public. You really hone in those skills on how to deal with all sorts of people. And even today, if I'm across the table from an investment fund or from a bank or from a potential buyer or a seller, I know how to talk to people. And so I'm really thankful for that. And people often get so enamored with technology. What they don't realize behind the scenes, ultimately it's one person dealing with another person, whether it's someone on your team dealing with someone on their team, or someone on your team dealing directly with the principal, or the two principals talking. It's people dealing with people. And I think that's an important skill that I see a lot of people come into the market, and they're so technologically driven. They're throwing tons of money at real estate. They wonder why they have no success. They spend all this money on marketing, and they don't know how to talk to people. So I really recommend to everybody to learn how to talk to people. Use the 2 ears that God gave you and the one mouth. I think we got a 2-to-1 ratio for a reason, because we're supposed to spend more time listening if you actually want to get to know people, understand their issues and problems. So that was a bit of a rabbit hole, but I'll get back on track. So finished, started my master's, moved back to Ireland, hated it, but I did learn how to talk to people. So that was a win. Part of my experience in Ireland is I bought a condo, got broken into, and put it right back in the market. Said, I'm out. I don't want to live here. I don't feel safe. And I made 35,000 euro. Now, what was cool about that, I'm looking at my job. I'm looking at the check I just got net from real estate and thinking, okay, I didn't even mean to do this. There's some to this whole real estate flipping thing. I didn't even really think about it like a flip. I just knew that the chunk of money that I got from one transaction was something I'd worked for, 9 months for in my other job. So this doesn't make sense. So I decided to move back to the States, finish off my master's in California, because I always wanted to live in California. I mean, who doesn't? Florida and California, I think that's the best that the States has to offer. I probably annoyed people by saying that, but that's just my opinion. Anyway, so moved to California, was doing my master's, but I decided I would really want to look into real estate. At the time, I couldn't have a job because I was on a student visa. So it forced me to say, I can invest money, I can buy and sell property, but I can't have a job. I can't go work for someone. So I bought a property. It was a probate. It took me 4 months to find it. A guy I went to church with flipped houses. So I said, tell me what you do. Let me help you. So I was going to Home Depot, running around town with him, looking at houses, looking at his rehabs, helping him load, unload stuff, whatever needed to be done, and kind of got the formula, which is here's the box you need to buy in, here's the price range you need to buy in, here's the price range you need to sell. So that was cool, but it took me 4 months because I was so scared about buying outside of that box and outside that price range. I literally was looking at this square in San Bernardino between this street and this street and this street and this street for around 130,000. And by the way, at the time, this fixer uppers were going for 150, 160, and like super nice retail, we'll say it was 170 to 190. So just to give you a price range there. So found this probate deal, got listed 132,000. I'd hired this old lady realtor who was super patient with me. Now when I look back, I'm like, man, like I emailed this lady every single day for 4 months. I mean, it was nuts, but she got her sale for $132,000, which by the way, is right outside my office. It's hanging on the wall. And I do that because it reminds me every day that this started with one deal. So yes, there's 7,500 plus transactions at this point, 15 years later, but it started with that first deal. And even when I have students come through the office, they always ask me, what's that deal? And not only is my first deal out there, my citizenship is out there too. And I became a US citizen a few years ago. And I say that these are things I'm really thankful for. I'm thankful for my first deal. I'm thankful for being a US citizen. And I tell people it's good to be grateful for things and have that constant reminder right in front of your face. So did my first flip, did exactly what my coach told me, my unofficial coach, unpaid, I should say too, made about $35,000, bought for 132, put 15 in it, made my first mistake. I moved into the house. I decided to move off campus, move in a house and move room by room as I rehabbed. Disastrous idea, had an antenna fall on me, plumbing leaks, broke, I don't know how many panes of glass, because it was 1950, these crank windows with the little panes. I was scraping each one. So I broke like basically every pane of glass in the house. I electrocuted myself, just everything that went wrong because I didn't know what I was doing, but I knew that I wanted to do exactly what I was told to do. And if I did this, and the big thing he told me to do at the end is to put a sprinkler system. Why? We're in Southern California, no clean green grass because we're surrounded in the lower end neighborhood where everyone just had dirt yards. So you had my house with fresh paint and a bright green yard. So put the signs out, did exactly what I was told to do, and all these buyers came. So I made, like I said, 35 grand, decided to roll that money to the second deal and made my second and third mistake on my second house. So what I did was decide to move back to Florida, rehab remotely, big no-no when you're starting out, by the way. We can do it now, but don't do this starting out. And I hired a friend to finish the rehab. So anyway, complete disaster. Every single thing went wrong. The job took 6 months. I'm just like pulling teeth, and he's my friend, so I didn't want to yell at him. And it got super awkward. One of those moments like you don't want to sit down and meet them at a holiday kind of deal. Like it got bad. So we got the house done. I skated out the back door with, I think, 10, 12 grand in profit, maybe 15 on the outside. But the market was already dipping in California. This is the end of 2004, beginning in 2005. When I look back, I saw the cracks in the armor 14 years ago. Not 2007 and 8 when everyone else says the things crashed. And in fact, moved to Florida, started buying foreclosures. I asked a lot of questions. And I say to everybody out there, I didn't know what a foreclosure was. I didn't know what the courthouse steps were, but I kept asking questions because I was so driven for success in real estate and figuring this out. I realized very quickly, you just got to ask a lot of questions. And my father, the way I was raised, he said, the only dumb question is the one you don't ask. And he paraphrased a little bit different, but something along the lines of that, or if you don't ask, the worst you can get is a no. I mean, it all made sense to me. I didn't feel like the downside of asking a question was worth not asking the question. It wasn't that bad. The worst someone could say is no or get lost. And I was okay with that. And I eventually started to find people that would give me answers. So I asked my friend's father who bought the courthouse, like, which room do I go into? So I went into this room. I'll never forget it. A bunch of used car salesmen, people winking and nodding and hiding behind. It was crazy. And then they're bidding on numbers. So that there's a clerk up front auctioning off numbers. And then people are bidding on those numbers. And then people are rolling up with money and like cash on the spot and buying these properties. And so then finally I found a lady to turn the numbers into addresses. So I was like, this is cool. So the auction was at 2:00. I'd drive properties in the morning, get to see everything. Then I'd turn up in the afternoon and I knew what I was bidding on finally. So I stumbled through that process for a couple months, but then I started buying houses. And within a couple of years, I was one of the biggest buyers at the auction. It was crazy. So this is where the story shifts direction. So for those who remember, who are listening to this, and maybe those who don't, just pay attention to this, the market shifted quickly. In fact, there was a global collapse At the end of 2007, I'd found myself made and lost $2 million. Done. Out of business, like done. And I realized that, okay, this is bad. So I've got a choice to make, right? Do I throw in the towel like everyone else around me, file bankruptcy, giving up on real estate? In fact, the biggest investor in this town, he was spotted at a fairground selling knives. This was the biggest investor in town. I mean, just completely done. Now, he did some unethical things where he burned a lot of people on the way out, but he was the biggest guy in town, and he was at a fairground selling knives. I mean, just sad. And I genuinely felt sorry for the guy, maybe not for the things that he'd done unethically, but I could relate to the fact that where you're being here and you're now down here, and that definitely sucks. So, but one good lesson I realized is money doesn't make you happy. So I was dead broke, had no money, but I was still happy. And I remember telling my wife at the time, I said, we got no money. We're going to stop paying all these mortgages. We're negative cash flow. We have no income. Like, we're done. So we did. We stopped paying absolutely everything, started negotiating short sales, both on securitized debt and unsecuritized debt. And that took about 6-9 months. Actually, no, it was a little over that because it was 2009 when I finally got everything settled. So that was a good 1.5 years total. So all the credit card debt was gone. All the securitized debt against assets was short sold. And I was able to do all of that and avoid bankruptcy. Now, that might not sound like a huge win for people who are listening to this going, well, yeah, you were dumb. Well, yes, I was dumb. I made a lot of mistakes. The difference is not the mistakes you make, it's the lesson you learned. And I learned a lot of lessons and changed the way I was doing business. The biggest single mistake I made, which is relevant to today's discussion, I wasn't looking at the market. I was so focused on the raw numbers of my buy price and my sell price, I ignored the fact that the market was in free fall. So I say this to everybody, look at the market first. Always look at the market. Understand the opportunity. Make sure your business is in line with the opportunity. If we looked at a tide coming at you, if I said to you, imagine putting up like a board and saying that the wave's coming at you, you're gonna put up a board, you're gonna stop that wave. We're talking about the ocean, by the way. Everyone would say that's dumb, but that's basically like rehabbing into a downward market. You're saying, you know what, I'm a rehabber, I'm gonna fight the market, I'm gonna sell my house because I did the numbers. It was dumb. The house was literally declining in price. And at the end of 2007, I liquidated some houses for the same price I'd purchased them before rehab. So now they got my rehab and my holding costs for free. And I ate all of that. I remember it was depressing, bringing 20 grand, 30 grand to closing just to sell a house. It sucked. So big lessons there. Look at the market, look at the opportunity, figure out how to capitalize on that. That's a good lesson. Also, I realized something specific about real estate, which was not just specific to me. There's always money in real estate. So what do I mean by that? There was wholesalers crushing it. And I didn't realize at the time, they were the smartest guys in the room because they took all of the market risk off themselves and they were just day trading real estate. So if it was selling here, they would buy here and sell here, just collecting that arbitrage day in, day out. They're driving around in fancy cars and beautiful houses and they're doing great because they had no market risk. They simply were day trading. And I'm trying to make that point over and over again. When the market's risky, sometimes the best strategy is just day trading real estate because you've eliminated the market risk. So that's lesson number one. There's always money in real estate. But the most important lesson, and it kind of ties into looking at the market, is that you got to be on the right side of the trade. So let's take today's market. I liquidated my rental portfolio. Why? I bought it down here and I'm selling up here. So I think I'm on the right side of the trade and I got a lot of data to show that. But if I'm buying up here when other people bought down here and I reasonably believe the market's going down here, that's probably not the right side of the trade. To be a buyer of investment properties in Tampa, Florida today, probably not a smart move. You look at the cap rates, you look at the price you're paying compared to where it was even 5 years ago, it's nuts. I mean, just take Florida in general. It was down here, it was up here in 2005. It's down here between 2008 and 2011. Now it's back up here again. In some cases, it's back up higher than what it was in 2005. So it doesn't take a rocket scientist when you look at a lot of the simple data that's out there, just looking at Tampa market prices, and you just see a graph like that, you can understand you're not buying at the bottom of the market. That's for sure. Now, is it the top? I don't know. Everybody's got to do their own data on that and really try to understand affordability, understand what's going on with the economy on a macro level, and understand globally what's going on. And I see lots of indicators that we're probably heading towards a recession now. We've got a 3-month plus run of this negative inverse yield curve. And so there's things like that where my radar's up going, all right, I know we got change of hands, possibly in presidential race or maybe an extension on that. You know, I'm not here to get into politics, but I do think that in the next 12 to 18 months is going to be a shift. And it's not just going to be in real estate. There's just going to be a reset with a lot of things economically. But my point to all that is you got to make sure you're on the right side of the trade. And there's different times to buy and there's times to sell. There's times to wholesale. There's times to rehab. There's times to, you know, move into different asset classes depending on the opportunity. And the most successful investors I know are not doing the same thing today that they were doing 10 years ago, for sure. That's one thing I know. Everything in real estate has an expiration date. You've typically, if you're an innovator in real estate, you'll exhaust the opportunity while you're ahead of your competition. The competition catches up, or as one of my mentors calls it, the dumb money. He's a little bit more crude and calls it the masses of asses, not meant to offend anybody. But my point to all that is that once the dumb money comes in, typically the opportunity is closed, and you've got to innovate and be looking ahead at the next opportunity and be out ahead of your competition. So today, we're innovating. As we're talking here today, I'm back to seller direct. I've gone through foreclosure auction. I've gone from the MLS to focusing on foreclosure auctions, to focusing on REO auctions, to now going back to seller direct again, because the competition on anything that's on a list or on market, it's gone. The opportunity is essentially gone. You're competing not only against institutional money as far as buy and hold guys, you're dealing with mom and pops, cash buyers. People want to buy and own property just because long-term debt's cheap. Now you got the new player in town, the new kid on the block, iBuyers. You got Zillow, Open Door, OfferPad, just to name a couple. And they're all competing for the same kind of assets, and they're literally driving the price up overnight. They're trying to turn real estate into a commodity. No middleman, no realtor, no mortgage broker, no title companies, just collect fees, small arbitrage, simple, really, really small margins. And essentially that cuts out the investor who's trying to compete with them. So one of the opportunities today is figure out how you can sell to these guys, right? If you're a seller and they're a buyer and you can make money, you're on the right side of the trade. If you're trying to go head to head with someone who's got 1,000 or 1,000,000 times more money than you, I mean, they've got trillions, you may have millions even. I mean, it's not a fair fight. So I always try to understand in real estate, not only what do I want to buy, but where can I compete effectively? And that goes back to understanding the market and the opportunity. And so don't push yourself into a corner where you're saying, I'm this, and this is my strategy. Always look back at the market going, am I in line with the market? Am I going with the tide? Or am I trying to fight the tide? Because as we talked about earlier, it's just not going to be possible.
Lee, I love that answer. There's so much in it. And I've got to ask the next question, which is one I ask a lot of people, is that I feel like there's a lot of people, especially today, there's, big movement, and it has been for a while, this whole hashtag fail, right? There's all these videos on YouTube of watching people fail at something and people laughing and kind of looking like, oh, that guy failed. And I think people get bent out of shape when they make mistakes. I'm currently reading a book that's a classic. I just haven't picked it up until now. It's called Failing Forward by John C. Maxwell. And it talks a lot about reprogramming your mind about the way that you deal with missteps, miscalculations, mistakes, failures, etc. So I've learned that successful people, after almost 100 interviews here on this podcast and over 30 interviews on my former podcast, which was Real Estate Investors Only, I've learned that people that are successful have dealt with failure. They learn from failure. They create learning experiences from failure. And I know you just touched on that a little bit, but diving deeper, were you always versatile? Were you always that way?
Yes, I've always had a mentality of just trying to push on and move forward. But I think with maturity and experience in business, I'd like to go a little bit deeper on that specifically. So for me, when a failure happens, there's a couple specific things that happen right at that point. The first thing in my mind is I've got to ask a simple question. Where did I go wrong? So my point to all that is what not to do, right? So I look at where did I go wrong? Okay, it was here, here, and here. What's cool about that? Now I've got 3 things not to do. But I think it goes beyond that, because I don't want to live a life of just what not to do, right? I want to say, okay, if I don't do that, what should I be doing? So now I'm asking myself a lot better questions going, well, I have a very clear list of where I went wrong and what not to do. What am I going to do different? And that's where the magic happens, to be honest with you, because a lot of people do learn their lesson where they say, okay, I'm going to shy away from that. And their answer is, well, I lost money on a real estate deal, So my answer is, I'm just not going to do a real estate deal. The answer is way different. It's like, why did you lose money on that deal? If there's people in the marketplace making money and you lost money, now it's not real estate's the problem. It's not the vehicle, it's your strategy. So I try to understand specifically in my strategy where it went wrong, and conversely turn what I shouldn't be doing into what I should be doing. And what you'll find with an epic failure, this might sound kind of obvious, but when you learn what not to do, usually the answer of what you should do is the complete opposite. So, I mean, mind-boggling, right?
Well, it's interesting because I agree with you that the concept is like, okay, the old fashioned, especially as a parent, you burn your hand on the stove, right? On the burner. And then the idea would be like, okay, you burnt your hand on the stove, never cook again.
Right.
That's not the solution. It's
safe. That's the safe answer, right?
Right. Exactly. So your positioning, you're saying, let's dissect this. Let's sit in this failure, especially the epic ones, and say, what did I learn here? And there's amazing learning to be done with failure. And so I appreciate your honesty with that, because I think a lot of people are like, okay, that didn't work, so go the opposite direction and never go down that path again. Well, there's probably going to be something in your life that'll happen again that will occur that will have similarities to what you experienced. And in this Failing Forward book by John C. Maxwell, there's lots of quotes about it's not only the failures you need to learn from, but the key, and he's got lots of quotes from philosophers and different people, is finding a way to profit from your mistakes.
Yep.
So let's talk about that, how you've profited from some of these mistakes.
Well, sure. I mean, you take what not to do. So I'll give you an exact example. Rehabbing in a downward market was what not to do, right? So I have two options. Like you touch on this. I could not rehab anymore and just quit real estate. That's one option. Or I could say, what should I be doing in real estate? So if I'm looking at wholesalers and making a bunch of money, what side of the table do you think I went onto? Immediately, I was a wholesaler. So in 12 months, I went from negative $2 million to plus $1 million in 12 months. And that's not super glamorous. People talk about 8-figure deals and blah, blah, blah. I made 7 figures though in 12 months by being focused on a strategy that was the complete opposite. In fact, I was now the guy who was selling to me. So the wholesaler is selling to me. I was rehabbing the house and losing money. So I said, you know what? I'm going to be the wholesaler. I'm going to wholesale to the me's, and whether they make money or don't make money, ultimately that's their decision. And I would say that throughout that journey of wholesaling, there was a mixed bag of people I sold to. People made money, people lost money. People that bought and hold typically made money. People that tried to flip in a risky market didn't make any money. But the good news for me is that I was positioned on the right side of the trade by just switching from the rehabber, for the guy who owns the property, to the guy who sells paper, essentially sells contracts. And pure wholesaling, by the way, is selling before you buy. So it's essentially a risk-free transaction. You're collecting assignment fees. It's simple and it's guaranteed money. And in a lot of cases, depending on who your seller is, what kind of contract what you have, and what's legal, you don't have to close if you can't sell. So, there's a lot of ethical arguments about that. And I definitely understand that. If you're dealing with a homeowner who's in foreclosure in 3 days and you say, I'm going to buy your house, and then you don't perform, I'd have trouble sleeping at night with that. But, in a lot of cases, if you're clear in your disclosure, you're going to sign the contract, you got a 30-day inspection, and it's clearly explained what you're doing. You've got to work that out for yourself. But I did like wholesaling, and my exact example is that I turned a failure into doing the complete opposite thing. And monetarily, I went from a loss situation to a 7-figure positive situation in 12 months.
Lee, the thing I really appreciate too is that you mentioned it. And for some of our audience that hasn't seen a recession, I did. I started in 2004. I've been a broker throughout. I have been a real estate investor, not to your level. I've brought cash to closing on a deal I was selling. That's real humble. That's a slice of humble pie for sure. Yep. I don't want to just drive past this point. I want to make sure to settle in it. The decision for you to not go bankrupt and to actually go through the tedious process of short sales. A lot of people don't realize that that's actually a worst case scenario for you. The easier out would have been to go bankrupt. A lot of people don't realize that if you have a short sale, the difference between what you owed and what you actually did in the short sale, a lot of times actually goes on your tax return. And depending on your situation, this is not tax advice, but the whole point is that for you, you did take the moral high ground and you said, hey, I know I can go bankrupt. A lot of people I know are doing that, but you figured it out, you worked it out. And I've got to imagine that there's got to be a lot of seeds to your success in that experience too, of really working through it.
Yes. Yeah. Ultimately, I think you pointed to not only, I think it goes beyond business, it's a mindset. There's a certain mindset you can have. Do I want to take the easy way out, or do I want to, do this the right way? And it's funny that I'm talking about like screwing up the right way, but you're right. There was a fork in the road. Now, I will say, if I'm being completely honest, I looked at bankruptcy. If I'm looking at real estate as a marathon versus a sprint, in the short term, bankruptcy was easier. But if I truly believed, and I'll tell you what really turned off the light for me, when I saw properties I was selling at 150,000 going for 50,000, I said, this is crazy. I actually want to buy this stuff again. And I was literally, when I got back on my feet, buying the exact same house I was foreclosed on. Because I'd watched for it coming through the auction. I knew what kind of rehab I did on it, and I'd buy it for 30 cents on the dollar compared to what I sold it for, even at a loss in some cases. So I definitely, I took the mindset that I wasn't going to fail. And a lot of people talk with that. You read it in books and you're like, man, that guy's cool. But that did take some determination. And a key moment for me was I met with one of my mentors at the time. And I said, his name was Bumper. And I said, Bump, it was my nickname for him. I said, Bump, I screwed up. It's like, I've lost everything. It's like, I don't have like nothing. I'm down to like maybe 10 grand in my bank account. I'm done. And if from $2 million to like 10 grand, 10 grand, I understand is a lot of money to some people listening to this. And it is a lot of money, but it wasn't a lot when you're trying to invest in real estate and build a business. And he said, I'm waiting for an epic answer. This is a guy who had life experience like this, and both good and bad, by the way. And that's why I really was drawn to him, almost looked at him like a father figure in a lot of ways, because his life experience was bigger than anyone I'd ever met. I said, what do I do? I said, I don't even want to get out of bed. It's like, I'm really depressed about this. I said, I was here in my mid-20s and now I'm down here and I'm starting back at zero again, thinking, man, I've screwed up, not realizing 15 years ago, like it was a drop in the bucket. But at the time it was pretty epic. And he said, son, waiting for the best chance in the world, as you guys are right now. He said, son, I'm waiting for it. He goes, sell your way out of it. So that wasn't what I was expecting. So I thought about it. I thought about what he meant. And what he was basically saying is you can throw in the towel, or you can focus on creating revenue and just be solely focused on creating revenue. And by focusing on creating revenue, and new revenue comes in every single day, you're going to dig your way out of the hole. That's the quickest way to dig your way out of a negative hole, is to create new revenue. So I was laser focused. I said, how do I create new revenue? Realized wholesaling was the fastest, most efficient, risk-free, least headache way of creating revenue. And I dialed in just wholesaling. And that's what I did. That's a real story to bring home that concept of, looking failure in the face and looking at that crossroads and deciding what to do. I was that person. I sat at that crossroads, and I'm sharing this with everybody because I'm sure this is going to resonate with someone out there that's at that crossroad going, what do I do? Do I throw in the towel? Do I push forward? Now, pushing forward blindly doing the same thing would have been dumb. I want to be clear. I stopped what I was doing, but I focused on things that did create revenue very, very quickly. And what's really cool about that lesson, just 3 months ago, one of my clients got his senior officer embezzled $1.2 million from him. And he calls me up, and I actually kind of disappeared. So a little bit. So I just reached out to him like, hey, what's going on? And, I'm not going to mention any names because I want to respect their privacy. And finally reached out and said, things aren't going well. So what's my next question? What's going on? What's wrong? Then I dug into it and realized one of his senior officers, while his brother had died, embezzled $1.2 million from him. I mean, just horrific. I mean, that's just an astronomical amount of money. For anyone listening to this, most small businesses could not survive a $1.2 million, like straight cash out of the company embezzlement. I said, you got to do exactly what my mentor told me. I said, it was about 11 years ago at this point. I said, sell your way out of it. I said, the only way you're going to get out of this hole, not only for you personally, and not have your family affected by this $1.2 million embezzlement, is to sell your way out of it. And he said, okay. And he came back to me a couple weeks later. He goes, you know what? I got with the attorney. I've said it, forget it as far as going after this guy. I'm not going to focus on that because as you told me, Lee, he goes, you're not making any money from that. That's the attorney's job. There's no point not sleeping at night and spending all of your time on a lawsuit and paying an attorney to do it. I said, you got to focus on sell, creating new revenue. Which houses can you get to market first? How can you bring in cash? I'm here to say, I talked to him recently, And he has clawed back $600,000-$700,000 out of that hole. I mean, it's insane. And just taking the same advice that was given to me 11 years ago. So now we're on the second round of this advice. It's worked twice, so hopefully it'll work for you. And I say that in all seriousness because a lot of us, whether it's personally in business, you reach that crossroads, and it's not about failing. It's about what you do with that failure. And I wanted to bring it home with a real example instead of just talking theory up here and high level concepts, and bring it down to a personal story that I actually went through.
Isn't that amazing how you think about a situation that occurs, and it could be just someone saying a snide remark to you. Obviously, your conversation about this past experience is very serious, huge ramifications, but someone could just pop off and say something silly to you. And it's not about what happens to you. It's your reaction to it, right? So do you just ignore it? Do you verbally, bash that person back because they said something smart to you? It's all about your reaction. There's a thought leader that I really enjoy, and I've just gotten to know just by listening for the past year or so, a thought leader named Ed Milet. And Ed has this concept. It's not anything new, but he's really just leaned into it, that life doesn't happen to you, it happens for you. And if you think about it, your reaction to things, failure or success, is more important than what actually happened, right? Your reaction to failure is, how can I learn from this? How can I profit? How can I get better? I'm not dead, so God must have me here for a reason to fulfill some greater purpose, right?
That question went through my mind. I said, God must have a greater purpose for me, because I said, I'm still around. I'm still alive. I'm still kicking. In fact, you, in all seriousness, I knew investors that took their own life.
I do too. I know of people that have happened to, and it's just horrible because
2009, not only in real estate, stockbrokers. I mean, it was bad. You're talking about just entire net worths, not only of themselves, but of their clients' portfolios, completely wiped out. I mean, it was a pretty horrific time. Now, when you look at today, you feel like people just forgot that and they're spending like there's no tomorrow, which in some ways humors me. I guess it's dark humor in a lot of ways, but yeah. I do find it funny how quickly people forget. This was like the lowest of the low just 11 years ago.
And what I think is interesting, and this is not a psychological discussion, certainly we're not trying to get into the depths of what suicide's all about, but that's a permanent decision that's going to, the idea is it's solving a temporary problem. In most cases, and you have seen people that's happened to, that's never the solution. And it's a very, very sad thing. And that's happened locally here to some really people that you would think they've got all the successes in the world and they end their life. It's just so sad and so tragic. Okay. I want to ask, go ahead.
Point about money on that, just real quick. If money made us happy, why are people in Hollywood, alcohol problems, drug problems, suicide? Clearly money isn't the answer. So for my 3-year-old son, he has a little money bank. And every time I give him a little bit of money, I say, money's a tool, money doesn't make you happy. And he says, money's a tool, money doesn't make you happy. And then he puts it in his money bank. And I really want to instill that at a young age, and really for everybody out there. If you view money as a tool, your happiness won't depend on it. It's just a vehicle from get you from A to B. Now, not having money sucks. Anyone who says it doesn't, I think they're lying. But money itself, just a bank balance, won't make you happy.
I love that description, that money is a tool. One of my favorite authors is a guy named Dave Ramsey, and Dave Ramsey uses this example. It's been used a bunch of times before. Is money is like a brick. A brick's not good or bad. A brick can build a hospital, or you can use a brick to throw it in a window and steal something.
Fair point.
It doesn't do anything. It's the person that decides to do so. You can be outrageously generous with money. You could be a miser. You could be Ebenezer Scrooge. And so money is a tool, and your happiness. We've all met someone that has, you see that person that has the funeral or has that end of life celebration. They lived in kind of a meager house, and it wasn't anything special, but they had tons of friends, tons of buddies, great relationships. And you're like, wow, thousands of people attended that person's funeral. And then you meet that person that had everything in the world and was miserable and ends it all themselves because they're not happy. It's a byproduct. It's one of those things I think it's really important. Okay. Final part of our interview, I ask every guest this question, and the concept is called Dear Younger Me, which actually comes from a Christian song. And the idea that I want to share is that Dear Younger Me is this idea of writing yourself a letter when you're younger, basically saying, and we talked a lot about this in this interview, Lee, where you're basically sharing, this is what I wish I knew when I was 22. Well, I'm going to go back a little bit further. Let's talk to the 17-year-old version of yourself. Okay. You're immigrating from Ireland. And one of the things I'm going to read here is, so Brian Buffini, The Immigrant Edge. And this is not a discussion about Brian, but Brian distilled 7 traits of immigrants in his book. Trait 1 is a voracious openness to learn. Trait 2, a do whatever it takes mindset. Trait 3, a willingness to outwork others. Trait 4, a heartfelt spirit of gratitude. Trait 5, a boldness to invest. Trait 6, a commitment to delay gratification. And trait 7, an appreciation of where they came from. And the whole concept of the book is that immigrants see opportunity where Americans don't realize just how much of a blessing we have living in our own country. So for you, as you hear those 7 traits, and as you think about your experience over the past 23 years, what's the advice you'd give to that 17-year-old as he's immigrating here to the States?
Sure. I would figure out the long-term goal. I think that my answer is maybe going to be a little bit different, but I imagine yourself at 70 years old, and I say 70 because it's not quite dead, but it's definitely, you're in the 4th quarter, the 9th inning, whatever you want to call it, but you're in your later years for most people. And I wish at 17, I had imagined more vividly what being 70, sitting in a rocking chair would look like, who was around me, what my life looked at like, and who my friends were, what family was around me. And I think if I'd spent more time at 17 thinking about that instead of right here and now is what's so important when you're 17. And even for some people, it's their whole life. But as I got older, I realized it's not about the here and now, and it's about where I want my life to end and what I want that to look like. So I've been more focused the last several years on what I want the end of my life to look. And that's not just financial, by the way. That's just, like I said, you're sitting in a rocking chair. Who's your family? Who's your friends? What does your life look like? Who's in your circle? And I think about that more almost on a daily basis than just the problems of work today or, what my 1-year goal is, my 5-year goal. I go way beyond that. It's like, I guess at this point, it's a 30-year goal, right? Because that's, to your point, where it all matters. That's actually the only thing that matters. It's not about, how much money you have. It's about the quality of your life, the people that are around you, the influence you have on your friends and family, and, the kind of impact you made more globally than even your close circle, just with anyone who came in contact with you. And I think with the internet, it's even crazier because you literally can come in contact with millions or tens of millions of people, depending on who you are and how much of an influence you are. And I think that for me, that's a heavy burden to bear, but it's also, it's exciting because you can impact people positively or negatively by the things that you say and the messages you put out there into the world. And so I've been more focused on being a positive influence and things that are, I guess, less tangible money-wise, realizing that my happiness is going to come from where I want to be, in 30 years from now, not where I'm at today.
It's a beautiful answer. It's a beautiful way to end our show. I say this to all of our guests. The time flies by. The interview is very much as much for me as it is for the audience. I learned so much today, Lee, and I had such a great time. I want to share this with you, and I'm sure this is going to seem old. It may seem cliche. It may seem cheesy, but I don't often have someone who is from Ireland, and I know you've been in the States longer than you were in Ireland, but I'd love to share with you the famous old Irish blessing and share it with our audience.
I knew you were going there, by the way.
You knew it. So may the road rise up to meet you. May the wind always be at your back. May the sun shine warm upon your face and the rain fall soft upon your fields. And until we meet again, may God hold you in the palm of his hand. I think it's a beautiful way to end our interview. I appreciate that you take the real estate investing industry and you realize that it's more important than just the dollars and cents. It's the people behind it. And that's what we're all about here at the Calibrate Real Estate Podcast. So I would love to say thank you to Interview Valet. I'd love to say thank you to Jamie Richardson for connecting us, to our podcast producer, Kayla Davis, for editing and producing this episode. For my esteemed guest, Lee Kearney, I'm Kyle Malnati. And as I love to say, we will see you around the neighborhood. Thanks, everybody. Bye-bye.